Good morning. It is Monday, March 3rd, and we are starting off with a new month and new money coming into the markets. We have plenty of job catalysts this week, and insurance plays will be in full effect, and we're capped off this week by Powell speaking on Friday. So let's get ready for our trading today on the ES. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So the first thing we want to start with is looking at the catalysts that are upcoming for the month. And we always want to start here because we assess where the risk lies in the market. And we don't have the insurance right now for any of the catalysts over the next couple of weeks. Today, we don't have anything major on the docket. There is a Fed speaker at 12:30 Eastern. There's 3 and 6 month bond auctions. There's always the potential that we're going to get something from POTUS, either him tweeting on Truth Social or a comment about Friday's meeting with the Ukrainian President Zelensky, or any wild card is out there. But in terms of what people will position for, there's nothing today that we're looking for that downside pressure. Looking ahead to tomorrow, again, nothing major. So early this week is our potential for a moving day because on Tuesday afternoon, we should see that insurance buying come in for ADP on Wednesday. And NFP on Friday is always a key factor. We also have ISM, factory orders, trade balance, and again, Powell on Friday as well. So there's a lot from Wednesday to Friday that we should see these elevated into our red zone, and that will bring that downward pressure. So we already can anticipate and follow those flows because the size money that's in the market that has hundreds of millions, billions, and even trillions in AUM are going to be protecting that capital. So that's where they buy that insurance for any outstanding, unplanned vol event. And if we look at the following week, we have JOLTS, CPI, and PPI. And again, nobody wants to prepare in advance for the storm. They wait until it's already upon them and then start buying. That's what we always see is in the 1 to 2 hours leading up to the event. That's when we see that insurance coming in as everybody waits to the last minute. And that's what makes the roadways crowded when you're looking at a hurricane coming. And that's what makes the market move as we're coming into these catalysts. So that's what we're going to watch for this week is today and tomorrow, unlikely to see that downward pressure, so we're not going to focus there, but we are keenly aware of where these risk points lie. Now, for our positioning today, our systematics are not going to be very much of a participant this week, which means that we're not going to see that contained range of accumulation and distribution on the backs of this system and these systemic mechanical funds. For our line in the sand, we are at 60.36, so we are under that, which again looks for cleaner moves, stronger price action, wider ranges, wider rotations, and that's what we saw last week. We saw that into Friday, and we're seeing that into our overnight session here. Now, Globex right now would be opening on a gap, so we want to be aware of that for the market opening when the cash index opens at 9:30 for our TH session. In terms of our dealers and market makers, this 6,009 to 14 is right at our edge where our systematics turn into small sellers. Really, at the line in the sand where we get that $4 billion offer is more critical because that's also where our market makers change the way they transact in the market and change the market from a fundamental and characteristic perspective. So that's going to be your big level to watch, and that's right at our rotational high this morning. Then we have our line in the sand, and above us, if we get over that, right at our pivot is where we come into another multi-billion dollar offer. So we'll want to pay attention there. To the downside, if we make a move down to try, if we open on a gap, try to fill the gap or make a move back inside of Friday's range, your big areas to watch in terms of our levels are going to be this 59.64, which happens to align with our Globex value area low right now, and then 59.16, which you can see we have a very large position, our largest that the market makers have sitting right here at that 59.10 to 11. So that's where we held down on Friday. Once we got over that, we saw the price probe in M period. And this is about a $5 billion position that we want to pay attention to. And that's right at the edge where our systematics go from $180 million buy to about a $2 billion sell. So that's a significant change. But again, your bigger change is if we get down to 58.91, where you bring in that 5 billion and then 12 billion below that. So these tails are where we see the bigger risk. We're more likely going to stay inside of our rotational zone and more likely get a move up trying to get to that line in the sand to neutralize this week ahead of our key data points. Whenever we have very large data coming out, we see that line in the sand as there's uncertainty in the market become more of a magnet. And that's what we'll watch for as we go into Wednesday and into Friday is either getting to that or trying to get back over to dampen any of that risk that our market makers are facing. So that's what we're going to watch for today. We will also keep our subscribers updated and we'll keep you all updated as the week goes on for the insurance plays that are coming into the market, as that is where you can see billions coming in and can piggyback off of that, either for the move down into the event or the unwind up as if people get overinsured, as traders typically get crowded in one direction. If you guys have any questions and you are in our Discord, please feel free to ask. Otherwise, make sure to control your risk. That's the one thing as traders that we can control each day, and that is our responsibility. So have a great day trading, everybody, and we'll see you again tomorrow.